On this week's show, a look at Bitcoin price, my easy trading technique, and the project valuation. Let's do it. So welcome to episode 14. Can you believe it? It's been a rough old week on the markets, and as I mentioned in last week's video, Bitcoin price could fall, and this week it definitely had some issues. Breaking through the support to once again hit 19,500. With the project needing Bitcoin to be around $24,000 to break even, I think we can all guess the results before we get to them at the end of this video. That said, let's take a look at the likely routes for Bitcoin price, and then quite a detailed look at my simple, no technical analysis, trading technique, and then we'll have a look at the bloodbath that is the actual valuation. So what's been going on with Bitcoin? Well, it's been on a serious downturn now since the high of 25,200 on the 15th of August. It's formed a drop-based drop pattern and lost around 20% of its value. We are now in another base, where the market goes sideways, normally for a couple of days, before the next move. But is this move going to be up or down? The price could easily now push to form a double bottom, copying this year's all-time low of 17,593. Looking at my chart, the first support line is held at 19,500. The second green line is the year's all-time low at 17,500, but we could see another push this week from the bears and testing that support level. If the support fails, then we are looking at a mid-$14,000 a coin. Oh my gosh, that's the third green line. And a potential price cascade could be on the table, pushing it down even lower to 10,000. The last green line on the screen is 4,000. This would be insane. But here's the thing, those prices are definitely on the table. The bear market isn't scheduled to end until Q3, Q4 this year, so there is plenty of time for the price to crash through all of those supports. From my perspective, this is a mixed bag of news. If the price goes down, I have to wait and hold on. But I still have some funds left to invest, so it could be a profitable time. I'm just keeping those funds aside just in case. Now, of course, the price could bounce back, as it has formed a high-low, which is normally followed by a rally. The last red candle on the screen. The rally could be significant, but my Womble senses tells me this is unlikely. Bitcoin has proven me wrong many times, which is why Wombles do not do price predictions. So for me, there's nothing I can do, but I can still trade long positions on the spot market. What do you think? Do you think the price is going to go up? Do you think it's going to go down? Do you like what I'm doing? Why not leave a like, a comment, or even subscribe to the channel? It really means a lot. So with all that potential bad news, let's have a look at a simple trading system that I sometimes use. This doesn't involve any complex technical analysis or maths, and it's pretty hands-off when it comes to monitoring positions. But there are some rules. The first thing to remember is I'm only trading coins that I don't mind keeping for a while in my portfolio. In this case, this is Ethereum and Bitcoin, so I'm only going to trade those pairs. So here's the other rules, and we're going long only on the spot market. So let's assume we have £3,000. We're going to take £1,000 of that and buy some Bitcoin. We'll keep the other £2,000 in reserve. We will then place 5, roughly £200 positions at the support levels on the market. We'll also set a take profit at the resistance levels. Remember, we're only going long here. If the price drops and all positions are consumed, i.e. we've bought a pile of ETH in my case, we'll take another £1,000 from the reserve, buy some more Bitcoin, and repeat. This will only happen if the prices drop. So we're actually buying Bitcoin cheaper than we did originally. So how do you work out these support levels? Well, there are many ways, but one of the easiest is to look at the order book. Go onto the spot market, and I'm using Binance here, and click on the green icon highlighted by the little box. Set the number on the right to 100 or the highest it will go. We can now plainly see where the support levels are. In this case, 19,700, 19,500, and a little one there at 18,100. There are some lower ones at the bottom, but they are too low to be concerned with. If there isn't enough, you can change that number that we set to 100 and get a more granular look at the orders. Another way to do this is to use fib lines. These are support and resistance lines used by traders. It is possible to set long orders at points as noted above and take profits just below the next line. In this example, we placed an order at the 0.236 line and a take profit order at the previous 0.236 line. We won the trade. Fibs are quite controversial and are a bit of a self-fulfilling prophecy, but this is an example of how they can be used. For me then, I'm trading Bitcoin ETH, and here are my current trades. So one executed at 0.0745 and is currently around break even. The second trade, a smaller one of 0.03 ETH, sold for about 1% profit, while my other long positions, the green lines, are still waiting to execute. This week I've made about 2% ROI in the trading fund, and it's been a bit of a slow week for me, and I've only really managed to put a few trades on the exchange. Now, the whole thing with the trading fund is that we're not trading dollar values here, we're trading crypto pairs. Even though I might make more Bitcoin trading, if the price of Bitcoin goes down, then my actual dollar valuation or pound valuation goes down. And we'll see this in a moment when we look at the valuation. So I think we need to find a different way of measuring the trading success. But I'm not sure what that is right now. Okay, so looking at our trading, we are up approximately 2% ROI. But in real terms, because of the Bitcoin price crash, we're down 20% in actual value. This is nothing to worry about, just wait for the price to go back up. In crypto, we're down 10.74% in total, and our stocks are also down 2.45%. This means that the whole fund is down 5% on last week. Looking at that from an ROI perspective, we can see we've fallen for the second week in a row, and we're now at minus 9.5%. This isn't a surprise. As I mentioned at the start of the video, we just need that price to go back up. And we now know the break-even point for the fund is where Bitcoin is 24,500. So we're just waiting for that to happen again. Okay, this week we're not going to go into the detail. We're not going to look at our funds. I mean, it's obvious that there's blood on the carpet. So that's all from me. And as I always say, onward and upward.